All right, let's dive right in. In the fintech world, sometimes a great story, a really compelling narrative, can be even more powerful than a stellar balance sheet. And today, we're going to unpack three huge narratives that are really driving the market. And this really hits the nail on the head, right? A simple, powerful story can just grab everyone's attention in a way that, a dense earnings report just can't. It's really about painting a picture of what's coming next. So, what are these big stories shaping things right now? Well, we're going to dig into three of them by looking at three very different companies: BitMine, Circle, and eToro. And trust me, each one gives us a totally unique clue about where all this is going. Okay, first up is BitMine. Their story is, well, it's about as straightforward as it gets. It's a huge, all-in wager on the future of one thing: Ethereum. And when I say huge, I mean it. We're talking about 4.5 million ETH. That's enough to make BitMine one of the biggest institutional holders in the entire world. This isn't just some small part of their portfolio. For them, this is the whole company. Now, if this strategy sounds a little familiar, it should. It's basically the exact same playbook that MicroStrategy made famous with Bitcoin, right? You just turn your entire company's balance sheet into a direct way for people to invest in a single crypto asset. But here's where it gets even more interesting. BitMine isn't just sitting on this mountain of Ethereum. Nope. They've added another layer to their strategy, one that actually brings in cash.
So how are they doing that? Well, Ethereum uses a system called proof of stake. The simplest way to think about it is this. By staking or locking up their ETH, they're helping to run the network, kind of like helping to secure and validate all the transactions. And for doing that work, they get paid. They earn a steady reward. It's basically like earning dividends on that massive ETH treasury they're holding.
So for an investor, the appeal here is super clear, right? It's a dead simple story. You want exposure to Ethereum, you can just buy a regular stock. And it's a high beta play, meaning if ETH goes on a bull run, this stock could really fly. But, and this is a big but, that sword cuts both ways. If the price of ETH tanks, the risk is just as big on the downside. All right, let's shift gears completely for our second story. We're going from a super high-risk bet on a single asset to something totally different. We're talking about a company that's all about building the boring but absolutely essential infrastructure. The plumbing of the digital economy. So let's talk about Circle, the company behind the stablecoin USDC. When they went public, their stock had a really rocky start. It was all over the place, and you could feel the skepticism from the market. So it makes you wonder, right? Is the actual business struggling? Well, here's the thing. If you can just ignore the noise from the stock chart for a minute, the answer is a pretty solid no. Behind the scenes, the core business has been rock solid. They are just quietly and effectively getting the job done. And their business model, it's just beautifully simple, but so powerful. For every single USDC out there, there's a real dollar equivalent held in reserve, mostly in safe, short-term government bonds. And guess what? Those bonds earn interest. That interest, that's Circle's revenue. So the more people use USDC, the bigger that revenue engine gets. Simple as that. So you see, the story here isn't a risky, speculative bet at all. It's about building those pipes, that essential plumbing that connects the old world of finance with the new crypto world. A bet on Circle is really a bet that no matter what happens, we're going to need a stable, regulated, digital dollar to make it all work. Okay, on to our third and final narrative. And for this one, we're going to look at what the people on the ground, the actual users, are doing. The trading platform eToro just dropped some data that shows a really fascinating plot twist in how everyday traders are acting. First things first, activity is through the roof. We're talking an 81% surge in trading volume. That is huge, so people are definitely paying attention. But, and this is where the story gets good, it's not that they're trading more, it's what they're trading that's so interesting. And this is what people are starting to call the Great Rotation. See, during the last big bull market, it felt like crypto was the only game in town for retail traders. But now, we're seeing a major shift. People are moving their money and their attention back to traditional stuff, stocks, indices, you name it. And the big takeaway here is that this doesn't mean traders are giving up or leaving the market. Not at all. It's actually a sign that the retail audience is, well, growing up. They're maturing. They're not putting all their eggs in one super volatile basket anymore. They're spreading their bets and diversifying. All right, so we've got three really different stories, right? A wild, pure play on an asset, a slow and steady infrastructure play, and a big shift in what users are actually doing.
Let's try and pull all these threads together now and see what the big picture is telling us.
Okay, let's just lay it out. BitMine shows us that, yeah, there's still a huge appetite for that pure, high-risk crypto bet. Circle shows us there's a massive need for the safe, regulated, boring but important plumbing. And eToro's data, it shows that at the same exact time, people are moving back to the perceived safety of traditional stocks.
And the most important thing to get here is that these trends aren't fighting each other. They're all happening at the same time. And what that tells me is that we're looking at a market that's maturing. It's getting more complex, more sophisticated. Investors are making all kinds of different bets simultaneously.
And that really leaves us with the big, lingering question, doesn't it? Is this mix, this blend of wild speculation, steady infrastructure building, and a rotation back to old-school assets, is this just a temporary phase? Or are we looking at the new normal for digital finance? Something to think about.